What if I told you that the global financial system isn't shaking because of war or recession, but because of something far quieter, something hidden in plain sight, while headlines are busy chasing politics and stock rallies? Foreign banks are collapsing one by one, and liquidity is evaporating. At the same time, the US Mint has gone strangely silent. No explanations that make sense, no urgency in the mainstream media, just silence. And that silence is exactly where the danger lives. Because when money systems go quiet, it usually means pressure is building underneath. And when that pressure releases, it doesn't knock politely. It detonates. Before we go deeper, take 1 second to support independent analysis. If you value clear, no-nonsense breakdowns of what's really happening in markets, hit the like button and subscribe to Market Truth Archives. It helps this channel survive in an algorithm that prefers noise over truth. Alright, let's get into it. Right now, something unusual is happening across the global banking system. Large foreign banks, especially in Europe and parts of Asia, are reporting stress that doesn't match the surface-level economic data. Official inflation numbers are cooling, unemployment looks stable, and stock markets are still pretending everything is fine. But behind the scenes, balance sheets are rotting. Losses are being hidden through accounting tricks. Emergency liquidity lines are being quietly extended. Interbank trust is thinning out again. And when banks stop trusting each other, history tells us exactly how this story usually ends. Here's where it gets darker. Many of these foreign banks are loaded with long-duration debt purchased when interest rates were near zero. When rates shot up at the fastest pace in decades, the value of that debt collapsed. On paper, those losses can be held to maturity. But in reality, cash flow matters more than accounting labels. When depositors move money, when dollar funding tightens, those unrealized losses suddenly become very real. And that's exactly what we're seeing now. Capital flight, dollar shortages, emergency backstops, disguised as routine operations. At the same time, the US dollar has quietly tightened its grip on the world. Every global transaction still leans on it. Energy, trade, debt payments, derivatives all depend on dollar access. When the dollar strengthens or even stays scarce, foreign banks suffer first. They need dollars to survive, but the supply isn't infinite. The Federal Reserve doesn't answer to foreign economies. It protects the core. And when stress rises, the outer edges of the system cracked first. Now let's talk about the part almost no one is discussing. The US Mint going dark. Reduced output, missing data, delayed reporting, a strange lack of transparency around precious metal flows and coin production. Historically, when physical demand for hard assets rises sharply, authorities downplay it. They don't want panic. They don't want people asking why tangible value suddenly matters again. Because when confidence in paper systems fades, people don't rush into speeches. They rush into things they can hold. This is where the idea of a death bag comes in. Not a literal object, but a financial condition. A system overloaded with debt, derivatives, and promises that only work if confidence never breaks. The moment trust drops below a critical level, the bag tears. Banks fail, liquidity freezes, emergency measures become permanent, and those who are late to react are left holding assets that can't be moved, sold, or protected. Foreign banks are especially vulnerable because they sit at the intersection of multiple pressures: currency risk, political risk, interest rate risk, and most dangerously, dollar dependency. When the US financial core tightens, the shockwaves travel outward. Smaller systems don't get warnings. They get outcomes. You might be wondering why this isn't front-page news. The answer is uncomfortable. Because markets run on confidence. And confidence is fragile. The moment people realize that the soft landing narrative is built on leverage and hope, behavior changes fast. Withdrawals accelerate, volatility spikes, and authorities lose control of the timeline. Think back to every major financial crisis. The warning signs were always there. Inverted yield curves, liquidity injections, mislabeled as technical adjustments. Institutions insisting everything is contained. Suddenly over a weekend, something breaks. A bank fails, a fund freezes, redemptions, a currency collapses. And everyone asks how it happened so fast. It didn't happen fast. It happened quietly. Right now, foreign banks are shedding assets, reducing exposure, and tightening lending. That slows real economies. Businesses struggle to finance operations. Consumers feel pressure through higher costs and reduced access to credit. Meanwhile, central banks are trapped. If they cut rates too early, inflation reignites. If they hold rates too high, the banking system cracks further. There is no painless option left, and this is where the US Mint's silence becomes symbolic. Physical assets don't need confidence. They don't need counterparties. They don't default. When institutions start preparing for scenarios they won't publicly discuss, actions speak louder than statements. Reduced transparency usually means increased demand behind closed doors. On Market Truth Archives, we don't chase fear, we track signals. And right now, the signals are flashing red. This doesn't mean collapse is guaranteed tomorrow. It means the margin for error is gone. One unexpected event, one geopolitical shock, one major bank failing to roll over funding. That's all it takes to rip open the bag. For everyday people, the danger isn't just market losses. It's delayed access to money, frozen accounts, sudden rule changes. We've already seen how quickly withdrawals can be limited, and transfers questioned. What was once unthinkable is now part of official policy language. As we move forward, pay attention to what institutions do, not what they say. Watch liquidity programs. Watch physical demand. Watch which data quietly disappears. Silence in financial systems is rarely accidental. If you've made it this far, you already understand this isn't just another market cycle. It's a structural stress test playing out in real time, and the outcome will define the next decade of finance. Before you go, share this video with someone who still believes everything is back to normal, and drop a comment below with your thoughts. Do you think this pressure releases slowly, or does it snap all at once? Your comments help this message reach people who need to hear it. This is Market Truth Archives, and we'll keep watching what others don't.